Welcome back. In our top business story, Abu Dhabi Islamic Bank has received approval from Qatar's regulator to open an Islamic branch in the wealthy Arab state. ADIB's license approval comes after Qatar's central bank in February issued a ban on conventional banks operating Islamic branches. It was concerned after an overlap between conventional and Islamic financing, as some banks criticized that conventional lenders with Islamic operations had an unfair advantage over standalone Islamic institutions. Meanwhile, ADIB yesterday announced it had completed the first ever Islamic repurchase deal in the Gulf region together with National Bank of Abu Dhabi. The gold price reached record highs this week of $1,673 an ounce, driven by weak investor confidence and also the announcement that South Korea's central bank bought gold for the first time in over 10 years. Investors are currently rushing towards what is more than ever considered a safe haven investment.
Gold has always been seen as the safe haven investment, and this week's market activity certainly proves this. We have continued to see record high gold prices all week amid global concerns of the fragile US economy and the looming euro debt crisis.
Gold is the ultimate safe haven, and the events that we've seen over the last week or so from the US. I mean, we've had, a high noon in Washington and the gunfire at the OK Capitol Hill. It's been ridiculous.
Gold has been constantly hiking for the last 15 years on a yearly basis. So that built kind of trust for the consumer or for the investor to add on the portfolio, because he started to buy at, let's say, 300 levels, and then he added on the 400 and then on the 500.
The UAE has always had a love affair with gold, and a recent study by the Dubai Multi-Commodities Centre shows that Dubai alone represents 16% of global gold trading volumes. Analysts say that we are now in a dip market, meaning that this is a good time to buy gold.
This is definitely a buy the dips market. Where is that dip? Where would I come in? Anywhere between 1550, say 1580 down to 1500.
Are expecting gold to reach level between 1775 and 1800 before the year end. I look at 2012 a bit higher.
Demand for gold is at an all-time high. It is seen as a safe haven by many. But the big question is, how do I invest in gold?
You can buy gold as a gold jewelry, you can buy gold ingots and gold coins, and it's available in the jewelry shops in the UAE. If you want on a larger scale, there is large bullion house also who's trading bullions in larger scale. You have also financial institutions.
When investing in precious metals, silver should not be ignored.
If you get the direction of gold correct, you see the gold price moving higher. Silver will do the same. It will go in the same direction, but it will always outperform gold.
In 2010, we saw the official sector become a net buyer of gold for the first time ever. And this has had a huge impact on global demand for gold.
One of the key developments over the last couple of days has been news that South Korea had in fact bought 25 tons of gold between June and July. Now, prior to that, they just had 10 tons. So now they've more than doubled their gold holdings officially. So what does this say to the private investor, both in South Korea and in the wider Asian community? It's okay to buy gold.
With gold prices continuing their ascent, the UAE's future as a gold hub is very bright. Lourdes Sexton, 7 National News.
And now let's look at the stock markets. Air Arabia, for instance, the Middle East's biggest low-cost airline, said second quarter profit rose 2% to just below 50 million dirhams, with the shares up 0.8%. And also the DFM and ADX traded higher today. In our world business news, The Bank of Japan acted to tame the appreciation of the yen this morning following the Swiss National Bank's further monetary easing yesterday. Also, the BOJ said that it would increase its 10 trillion yen asset buying scheme by half to 15 trillion yen. The step became necessary as the yen looked like the only real safe haven currency in the world after the Swiss National Bank lowered the band for its main interest rate to between 0.25% yesterday. Japan's Finance Minister Toshihiko Noda confirmed the intervention soon after the yen started to fall against other currencies in early trading, but refused to say how much was committed. The yen fell 3% this morning to beyond 79.90 yen to the dollar. That is a 3-week low. However, Japan's benchmark stock index, the Nikkei, added 0.2% as especially export companies profited from the news.
The movements had the possibility of a negative influence on both Japan's economy and the stability of the markets. As such, we have just intervened in the currency markets and will continue to closely monitor the market's movement.
And to talk about this issue further, we're now joined by Bruce Powers, Head of Research at Trust Securities. Welcome, Bruce.
Good evening.
I have a very good question.
Okay.
Why is the yen considered a safe haven currency? The yield is close to zero, the nation is highly indebted, and is still struggling with the aftermath of the tsunami. Why?
Well, look, Japan still has the third largest economy in the world. They have a current account surplus, and they have been pumping tons of money into their system since the earthquake in order to support growth. Recently, it's looked at as a safe haven more because of fears about what's happening with the dollar and the U.S. and European economies. Also, I think the odds are now increasing that the U.S. could launch a third round of quantitative easing, which is going to affect the outlook for the economy there as well as the dollar. They don't want to have their currency too high because they want to support their exports and the growth prospects, especially since they're recovering from this earthquake problem. So the central bank is trying to keep things on track.
As we just heard, also the Swiss National Bank lowered the interest rate, and the markets is speculating that maybe they might also intervene in the currency markets. What I'm thinking is, will that really help reduce the appreciation of the Swiss franc, you think?
Well, it has so far. The franc is down a bit today. The franc is appreciated against the dollar over 35% in the last year, and the Swiss exporters have been getting killed. Now, I think the appreciation is more attributed to investors looking for a safe haven as opposed to the interest rate. So the interest rate change yesterday could have a short-term dampening effect on appreciation, but it may only be short-term. If that's true, then intervention is very likely, and they'll intervene to the point they need to in order to lower the currency or to at least slow the growth significantly. Now, the other interesting thing is that we may see other countries with strong currencies start to intervene in their currency markets in order to support their domestic markets. Brazil, New Zealand, and Singapore are 3 countries with strong currencies right now that are being watched very closely.
Thanks for your insights, Bruce.
Thank
Have
you.
a good weekend. Italian Prime Minister Silvio Berlusconi will today meet with executives, bankers and unions to discuss overhauling Italy's economy. As concerns are mounting, Europe's third largest economy could become the next victim of the Eurozone's debt crisis. Investors reacted by selling off stocks and bonds, with the yields on Italian government debt spiking to never-seen levels of above 6%. Reason being that the EU's bailout fund, the EFSF, would be too small to also be able to stabilize Italy's debt. The European Commission said there's no discussion of a bailout for Italy. On Wednesday, Finance Minister Giulio Tremonti met with Jean-Claude Juncker, the chairman of the Eurozone, for emergency talks. Despite politicians trying to control the fire, uncertainty surrounding the Eurozone debt crisis once more boiled up.
What really needs to happen is some form of coordinated thinking with respect to this crisis. Either the ECB need to step up to the plate, or Germany basically needs to buy into a full transfer union, and neither, I think, are likely.
Before we go, here's a quick overview of the oil, precious metals and currency markets, and after that we have the day's sports news for you.